When I first started trading, I was losing day in and day out, but I did this one thing that changed everything. I combined this with my current trading strategy, and again, I noticed over 50% more success over the next few months. That goes into what I was actually winning and then the success rate of what was happening with those trades as well. And I'm going to show you exactly how to apply this to your trading right now. The only thing that you're going to have to do is be honest with yourself and start to apply these every single day. Let's get to work. Now, before we jump into the charts, I want to say right now and break down exactly what we're looking at. So step one is going to be risk to reward, breaking down what R to R is and how you can apply this. And I constitute this to the art of not losing money or reducing the amount of money I can lose. So what we're gonna do is jump into trading view, and I like to use this for everything because it just gives the best examples. So really quickly, I'm just gonna clean off this chart for you so you can see as well. So we're just gonna quickly clean this off, and I'm gonna go over something that I've been talking about for the past basically 2 to 3 weeks, and it's one easy level. And so we're just gonna go over one overall trade plan, and that's it. So we have 2 levels on our chart. I brought on 164, which was your previous all-time high from like 2021. And then we had our breakout when you broke above, you shopped right here, 174.7, right? So these are our 2 major levels. Okay, so this is what I've been talking about on repeat was if you get above this level, you look to go long, right? And so all I do when I'm trading, right, primarily is you're gonna see me mention in almost all my YouTube videos is the break and the retests, right? So again, really quick, the break, the retest, and continuation. That's one of the biggest premises of my trades. Now, it's not my total strategy by any means, but that's how I enter 99% of my trades. So all risk to reward does is this. So you have this, and let me actually show you where that is. So you go over here on trading view to your left-hand side, you're gonna click over the 4th one down, bring it over, you have long and short position, and you can adjust it to how you see fit. I have them on my quick bar, you can favorite them. So we're gonna just show you the long case here. Now what I will generally do is I'll have a clear target. So like right here, we're just gonna target right back into previous highs here and then have stops. I like to have my risk reward around 2, maybe sometimes 3. The higher the obvious, the better, right? So how do you judge risk to reward? All it does is it's taking how much you're looking to make per dollar, and then you're also doing how much you're willing to lose per dollar. So right here, for every $1 I'm willing to lose, I'm attempting to make $3.4, so $3.40. That's the best metric to understand here. Now I can also go down a laundry list of the variables that come into this, and we'll go into that here in a second. But you can see that's what we're looking at. So my stops, in hindsight, I would bring these down a little bit further, so like almost at least $1, right? At least $1 to the downside, and that's what we're looking at. You could even afford to bring it all the way down past the little lows there. You're still at 1, but again, you want to stay as, best as possible for what you're doing there. So again, even back into highs. Now, obviously, too, you get a little bit of a higher push, but that's just a simple trade plan. Coming back into the key level, retesting previous highs right there. And you can see we almost hit highs once, twice, 3 times, and then you eventually break out. So you have a lot of opportunities there as well. So that's just really simple risk to reward. Understanding that. That's a valuable trade. It's not a 1-for-1. And if I can use this strategy and at least be successful 50% of the time, I'm going to have a winning strategy. Okay, now the same thing goes for potential downside. So let me go over this as well. So let's show a losing variable of this, correct? So really quick, let me bring up the replay right here just so you can see a little bit easier. And so what we're going to do is the break and retest to the downside. Now, I'm not a big fan of shorting against the trend, and I'll explain why if you haven't seen that video, but this is what you would look like for downside trading. And so you, again, bring up that little tool so you can see, and we go to the short side though this time. Stops, I'd have them a little bit, let's say you go long here, and you're going to have them right above previous highs there, and you're looking for at least a push down until where that gap either starts or gets filled down here, but we'll be more conservative right there. And so we already know this trade is going to lose, but as we let it play out, let's see how it plays out. Boom, boom, boom. And then boom, you're stopped out, obviously, when you break it back above highs right there. So you're stopped out, right? And so you're stopped out for, again, it's a 2.4-hour trade. So what does this mean, right? What does the risk to reward metric mean here? It gives you a statistic variable on how many times you can afford to lose and still be profitable as long as you're sticking to that risk to reward metric right there, 2.42, 3 point, whatever it may be. Now, this was on a Medium article, so I'm not going to take credit, but it's a really good visual, right? So what this basically means is your risk to reward, right? Your 4R, your 3, 2, so basically 1 to 2, 9 to 1, etc. So what does this mean? If I'm going to a strategy, That's 9-1, right? Going back into this, and it's a little bit uglier to see, like, and do the visuals of what's happening there. But a 9-1 would be way down here, right? My risk reward's like a 0.1, like, yeah, 0.2, 0.3. Basically means in order to win, I would have to be successful 90% of the time, right? Only 1 of 10 trades could be losers, or I would not be successful, right? That's an issue. So what I like to do is have a metric to where I can be right only 50 to even sometimes 30% of the time. What does that mean? If I'm in that metric to where I can afford to be wrong, I'm still going to make money. Now, does that mean that I'm going to the idea of, okay, I want to be able to lose half of my trades? No, but it puts you in a position to understand that you can still make money no matter what, even if your success rate is only 30%, right? Because you're taking highly valuable trades. Now, I will also say though, there's a skewed part of this, meaning I can come in here whenever I want and I can say, okay, well, AMD, you're at your key level. I'm going to have no rhyme or reason. And I'm going to put our major take profit, our risk reward. I'm just going to doodle up here, really tight stops right there. Like, that doesn't make any sense for me. I have no logic or thesis behind this right now, right? Now, I get it. I would be targeting maybe back into, previous all-time high there, but I also know that there's resistance here near 180. So again, I want to have realistic and overall goals, right? I want to make sure that this makes logical sense and I'm not relying on luck at the very least. So again, the more range that I'm targeting to an upside, I probably want to have more cushion if I'm looking to swing, scalp, day trade, whatever I may be doing there. I have to be honest with myself, like I was mentioning. So that's the variable that comes into this. And so as long as you can understand that you're taking good risk to reward trades, and I always recommend at least bare minimum, at least above 2R, bare minimum. That's a good trade for me. Anything above 2R. Now, you get above that range and you're looking fantastic. You're looking great. But again, you want to be able to see this visual of what you're doing. And a lot of traders don't even visualize a trade in this sense, and they don't even know how to do this, right? They don't even understand this metric of it. But at the end of the day, it all comes back down to statistics. And the best way I can do this is like baseball, right? A successful hitter in baseball bats a 300, meaning they only get on base 1 out of 3 times hitting the ball, right? That's the name of the game, is getting on base, keeping your success, and understanding how you win the game. That's how you win, right? It's not by being right 90, 80% of the time. I'm never going to say that I'm right 80% of the time because I don't even aim to be right 80% of the time. I want to be in this middle range of 40 to 50%, right? Now, obviously, if I can get my R ratio up, then obviously I'm making even more money. You can see if you're, trading at a 1 to 5 R value, then you get to 50 and 60 and you're really bringing in the big bucks. And that's when you start to get successful. But as a beginner, you want to hone in right on this middle range right here. Not necessarily making a killing, but not losing money either, and protecting your capital at all costs. Okay, so I know that was a little bit boring. We're going over risk to reward. It's pretty simple to understand, but again, when you start to actively thinking about the value of what you're trading and why you're trading it, I promise it makes a huge difference. Now, on top of using risk to reward, you also want to do this. Now, your current strategy, I recommend sticking to whatever is working for you right now. If you know that it works, it has success, then stick with it. I'm not going to sell you on a different course or a strategy that I use, but what I will say, you want to make sure that you're sticking to that strategy, and I'm going to go over how I trade using it, but also too, you want to reduce the amount of variables that are with your trading. What does that mean? I want to reduce the amount of stocks, the amount of things on my list, so I can refine my craft to get really good at maybe 3 to 5 overall names. I'll explain exactly why. Now I want to go into a few things. Now, number one, I'm going to go over some stocks and I'm going to go over some strategies. So the first thing I'm going to do is bring over my watch list. Now, for me, I'm lucky enough that I can stare at charts all day long, every day. It's my full-time job. I'm living the dream, right? Okay. For a lot of you guys, you're just getting into this, and I like to be as relatable as possible, okay? Your goal here is not to overtrade, right? I don't need 30 names here. I always tell new traders, you want to find 3 to 5 good names that move. And primarily those names aren't going to be small, tiny, they're not going to be small caps. They're just not. That's just the reality of what it is. And so I always come over here, and so I highlighted 5 names already. And so these are ones that I always recommend, right? You can actually take Dow off that list. We'll come back. We'll put one more here in a second. But again, it's going to be Qs, right? So that's always going to be the number one thing there. So again, you're going to go back. We'll actually just highlight that in there. Qs, put them on the blue list right there. So again, SPY, Qs, which obviously are your indexes, right? You're watching those. And then Google, Apple, Tesla. Now, you can mix and match these 3 here, but I think you always have to have SPY and Qs there. Now, why? Now, let me ask you a question. when you are getting someone to remodel something on your house, or you're seeing someone that's, let's say you have a house being remodeled and you have someone that's doing your electrician, right? He's doing all your electrical in your home. Are you going to hire that same electrician to do your plumbing, to do your drywall, to do your painting, to do your cabinets, to do your granite? Probably not. You're going to find someone that's a specialist in each thing, right? Each craft, right? That's what you're going to do. Right now, you might have someone that can do multiple things, and the likelihood of them being great at all of them is really low. And when you find someone that's great at everything, they're a gem. It is what it is, right? And so those are things you have to be able to identify. The same thing applies for trading here. You have to understand Tesla. Yes, it's a stock, it's an equity, but it moves far different than Apple. Apple, it's a stock, it's an equity, but it moves different than Google. They all move different, i.e. Tesla is up right now and Apple's down right now. I could go over to NVIDIA. NVIDIA would be also on this list of a little bit different, right? NVIDIA over the past however long, right? Actually, I just took it off my list, but you can see it moves different, right? It's way up in comparison to everything else. So things move different, and you have to be able to understand that. And if you're a new trader, you are not going to be able to understand how all these different names move, the different values of option contracts and everything there as well. So it's going to be harder for you to find value in what you're trading, right? A 2-hour trade on Tesla or NVIDIA is totally different than a 2-hour trade on Tesla. A lot more risk goes into everything because they move far different. For the less stocks, and now we're focusing on strategy. Now, again, I like to just clarify my strategy so you can see what I mean. Now, again, with me, I think AMD is a perfect example, but I can also use Tesla here. Now, Tesla, the big level that I've been saying on YouTube, on Twitter, etc. And if you want to follow me on Twitter, you can do that. The link should be down below. I post a lot of content on there around stocks I'm liking, charts, etc. You can see all that stuff in here. But yeah, so again, Tesla, we're going to use this one as a point, case, and reference here. What you wanted to see forever was a break in amount of 194. That's what you were waiting to see. That's what you wanted to see. And ultimately, you ended up getting it. So what happened here? We're going to go back, and it's the same thing that I usually do. I'm just going to bring up replay right here. Okay, so you get the break finally in the amount of 194. You so far have been rejecting continuously of this range. Okay, so what was I looking at here? Now, we knew we had a gap all the way at 206. And so what I was doing was entering a little bit aggressively once we got above 194. And then my stops were going to be right below those little swing lows right there, right? At about a $2 stop, my target bare minimum was 200. And then after that was into 206. So we're going to just put at 200, the first little resistance there. Again, called this out on Twitter, Discord, everything else, right? And then as that plays out, what happens, and you actually get more confirmation here as well. You can see that you play out to the upside, right? So let's turn replay off. Yes, turn it off. So it'll just go back to where you're at. Okay. And ended up playing out perfect into 200. Now, what's also happened here? You've noticed you're making higher lows across the board. So these are things I'm always looking for. When I'm getting into a trade, one, I want to see us break, mount, and push back up. That's what I want to see. Now, other signs of strength are higher lows and higher highs. That's a sign of continuation. Where for the same part to the downside is lower lows and lower highs, right? So if we were to inverse this chart, right, just so you can see for metrics here, you're making lower lows and lower highs. So you can see if I was trying to trade this to the downtrend, that's what I'd be looking for. And sometimes flipping the chart can help you guys. So that's something that you have to be looking for there as well. Now, again, your strategy should be able to hone in on your weaknesses and hone in on things that you're finding mistakes in, which we'll go into a journaling here in a second. But when I'm looking at these charts, looking at these trades, my strategy is solely focused on risk to reward and falling right into that metric, right? So when I get into a trade, I'm already looking at previous lows. I'm looking at the key level that we're looking to mount. That's what's happening there. So if you're using the RSI, MACD, I don't really care what indicators y'all use, but make sure that there's a clear plan of saying, okay, well, this can invalidate my trade at any point in time, because your strategy is what's going to keep you honest. Because people always say, how do I stay unemotional? How do I stay engaged in the trade? How do I, know when to take profits, this and that? Well, I already know before I even enter the trade where my profit taking is going to be and where my stop is going to be. Now, I might get frustrated with how we play out sometimes, but I know statistically speaking, it goes back down into risk to reward. It goes back down to my overall trade plan. Again, all comes back to this every single time. Okay, now number 3, this is probably my most important, journaling. Now, a lot of you aren't going to want to do this, and I can't convince you to. That's why I'm saying you have to be honest with yourself. And journaling makes you honest because you have to see it on paper, you have to review it, and you're going to see why you're losing every single trade. Now, for me personally, there was a common denominator with everything. When I was losing, I could identify this was happening on repeat. This was the flaw in my system, or maybe my strategy was just broken in general. That's why I went over my strategy in particular, so you could understand why and where things could go wrong simply. And then also too, you could see how it reduced my risk across the board. And this is a little bit of a touchy subject. I'm going to show you 2 options. If you're a beginner, I don't recommend this one, but if you are actively trying to get better and you're looking at things to spend money on, before you join a Discord, before you do anything, I think TradeZella is an awesome tool. It shows you literally, I'm not even sponsored by these guys, just want to let you know. It says a lot when I'm not sponsored and I still shout them out. But anyways, TradeZella, the best tool out there. It's like $50. It's kind of expensive, I'm not gonna lie to you. But anyways, actually they just dropped it down if you go annual to $30. That actually is not bad at all. But anyways, so you can see everything there, right? And you can also do replays, all types of stuff. Okay. Now, the free option is you go to your own Discord. You can make your own server. You go down here, add a server, make your own, and then you do this for yourself. Or you use old school pen and paper. Now, these are just examples of people in our Discord of what they do. And it's nothing crazy. It's like, look, trades are looking to get into, risk to reward there, what they're looking to get in, where their targets are and everything. Now, what happens here? You're able to go back and see exactly what your plan was, exactly what went wrong, right? I could go on a laundry list, but the common denominator here is one. Some people, if you're in a group with your friends, I recommend having a Discord with some friends that you have, right? Even if it's free, getting all your guys in a like-minded, situation, so y'all can at least critique each other, ask questions, etc., right? But you're going to be able to see those common denominators of what the issues are, what's playing out. It's going to keep you honest because you're going to have to go look back at your terrible trades if you kept doing the same thing, but you're also going to see what went wrong all the time. This was one of the most pivotal things in my own trading was journaling. Everyone that's like in our Discord that has done journaling, I have seen nothing but progress. I've not seen the opposite I'm not seeing any regression from journaling, right? And again, you can see James is one of our, biggest winners here, literally destroying it. But again, that's his common denominator, right? Journaling, right? And again, you're seeing what's going right, what's going wrong all the time as well. And again, this is why I always say, and this is the free one. This is like literally, you can do this all on your own. It's literally free on Discord. So again, what's an example of something that I would journal? Okay. Now what I would journal here is, okay, I'm looking to get in a Tesla, the amount of 194. Finally, I'd probably put in parentheses finally, because you've been rejected so many times. Stops below lows, so our previous little lows here at 191.6 on the 15-minute, targeting 200. That's all I put, right? I put the logic behind the trade, what I was looking to do, what I was looking to get out of this, and the risk reward, obviously 2.4 roughly, right? And if it hits, I'd be like, success, awesome. But I'm gonna tell you a secret. You're gonna learn almost everything. All your learning moments are going to come from your losers. For me, that's what I've got out of this personally. I don't learn a lot from my winners. I just don't. It's more of just celebration, cool, awesome. My plan worked. I shouldn't really be learning anything from my winners. I should be like, oh, this just worked. Like, right? My strategy, awesome. I practiced my strategy. It worked. Cool. Your winners are going to show you where flaws are, where things might go wrong, if you're counter trading trends and everything along those lines. So that's what you have to hone in and focus on there. That's going to wrap it up. If you got anything out of this, like, subscribe. I'll see you next time.